President Trump's very public search for Powell's replacement good or bad for the markets? Joining me live right now in studio is someone whose name has been floated as a candidate to replace Powell. He's BlackRock Global Fixed Income CIO and Global Allocation Team Head, Rick Rieder. Yeah, we'll talk about that later. But, Rick, get right to it.
Okay.
What is Powell going to say if you had to guess?
So my guess is he's going to talk about balance. He's going to talk about they're well-positioned. When you read the minutes, you talk about they're still concerned about you have some elevated inflation. I don't think it's that scary a number. You're still running inflation. So core PCE over the last 3 months, you're on about 2.8. But I think they're going to talk about elevated inflation. They're a good place today to move. Listen, I think ultimately they're going to cut in September. I think they can cut further. I think they can cut faster. But I think he's going to talk about balance. The economy's in a good position, and that they're well placed to do it. I mean, personally, I think they can go faster, but
let's say you mean 50 basis points, which is what Treasury Secretary Scott Bessent, you'd call for that?
So I think they can go 50 basis points. I think the environment, you look at the labor data of the last, what was just revised. By the way, the Fed minutes that came out were before those labor numbers came out. The 3 months, you've had a moving average of hiring 34,000 jobs per month. If you take out healthcare, which is not interest rate sensitive, not cyclical, that's 67,000 of the 34,000, meaning you're really having negative job growth. You have the risk of stall speed for employment. So I think they could go 50. One thing I would say, I said, people think about, where are we in terms of rate of change of interest rates? I just think the price is wrong. We look at markets where things priced. If you take where the funds rate is today, take 5-year inflation break-evens, it's 2.5%. It's actually under that. It's 2.42. If you get the funds rate down 100 basis points, you're still well above that. We just don't need to be sitting at 4 3/8 today. Could you go 50? By the way, people think it's panic. You just announce it. It's the wrong price. We need to move it to a closer to the right price.
Fed funds minutes, the Fed minutes from the most recent meeting, which was in July, did come out, as you just referenced. Here's what, and remember, this is the meeting that had 2 dissenters. First time in decades where we have seen that, where 2 of the voting members said, we think we should be cutting rates. Almost all participants at that July 29th to 30th meeting viewed it as appropriate to maintain the benchmark interest at 4.25% to 4.5%. They saw near-term inflation rising. They said that's likely. Do you?
So I think it depends on your time frame. So if you said over the next couple of months,
what do you mean your time frame? I mean,
so if you said is inflation going to rise over the next couple of months, are you going to see a bit of transmission from tariffs? You're seeing that. You saw that in apparel. You see it in electronics. You see it in household furnishings. You're seeing a little bit of elevation.
Estee Lauder today, $100 million tariff hit.
Right. So you take that and you say, okay, so what are we running inflation rise? We're still under 3%. You think about where we were a couple of years ago, and you think about the impact post-COVID. Today, you're running at levels that I would argue are not that scary. Now, where are we going over the intermediate term? Productivity, technology, innovation is going to change the paradigm in such a significant way. The focus on the next couple of months, that do we have a price level adjustment from tariff? And by the way, alongside of that, you talk about Estee Lauder or some other companies, you have some growth elasticity to that, suggesting that, gosh, you may have a little bit of price pressure. It will create some dulling of growth.
But it'll be mitigated by technological advances. I'm reading AI here.
Totally. And you think about, I think the biggest concern longer term, where is employment? And how do we think about that? And in the near term, you're starting to see job openings come down, job hirings come down, velocity of labor is down quite a bit.
So let's go back to the 10-year yield. And you said the last time around you like the belly of the yield curve, which would be let's call it the 5-year.
Yeah.
Both of those, as we showed, are down about 50-plus basis points since the start of the year. And that's with the Fed continuing to press the pause button on interest rates. So why is Powell wrong if he's concerned that we might really start to see a more meaningful move to the higher pricing? You just saw Home Depot saying that in the second half of this year, which we're in, you could probably see some of their prices rise because businesses have been shouldering those costs up until now. And at a certain point, they cry uncle. So why not, if the rates are coming down on 10 years and 5 years, just leave it?
So, I think people focus on rate of change. If you break down the economy, and I hear tons, I heard it all this morning, people talk about where the economy is. The economy is in good position. The aggregate economy is in good position. Why is that? Consumer spending at good levels today. Companies, CapEx, R&D spend are at good levels. But then you go deeper and you look at where is the economy interest rate sensitive? And then if you look at some of this consumption data and you look at all the earnings reports that are coming out, low income is having a really hard time. Higher income is doing well. By the way, high income benefits from higher interest rates. They're propping up consumption. Low income is having a hard time. Every piece of data we look at, Bank of America put out a phenomenal piece. Older people, savers, high income are doing quite well. Younger, lower income have a tough time. Those are the people that borrow. The mega cap, you think about how companies used to borrow using the interest rate. I was looking at it today. The Mag 7 have net interest income of almost $9 billion, meaning not only do they not borrow, they're actually doing well because the interest rate is high.
It's the small and mid caps that borrow.
Totally. Small and mid cap borrow, low income borrows, the housing market borrows, housing is stuck, and the government borrows. There's no reason to keep that rate there because who is interest rate sensitive is having a really hard time, whereas you're actually benefiting higher income, savers, older people, and people that have, some of the companies are sitting on a lot of cash.
You do realize that a lot of people inside the White House watch this network and watch this show and are watching you right now.
Right.
You have been calling for lower rates, and suddenly your name was surfaced as one of the potential candidates to replace Jay Powell for the Federal Reserve. First, when you heard that, I'm assuming you're not going to comment, but when you heard that, did you laugh? Did you say, oh, that makes sense? Or sure, I'd love to?
So, when I first heard it, honestly, when I first heard it, I don't think it's the greatest honor of my life. I mean, to actually be considered in a position like that and think about the responsibility. And quite frankly, what I thought about is the ability, and I think why serving your country is such a powerful dynamic, is the ability to help people through monetary policy, through economic transmission is really powerful. So the first thing I thought about, it was a big honor for me to think through that. Listen, I mean, I've talked about what I think in terms of interest rates, and whoever the next chair is of the Fed, listen, I do believe you have to get that rate down because I do think you have. By the way, when I talk about low income and I talk about low to moderate income, it's half the country. Mm-hmm. It's not this tiny 4% cohort. It's half the country. That I have a devout believer, like whoever the Fed chair is, I think should move that rate down.
When's your meeting on the calendar with Scott Bessent? He's the one. He's the one doing the interviews.
I have a full-time role trying to generate return for clients. That's what I'm doing.
All right. Well, yes or no? You take it if they ask.
I am generating return for clients. I'm working hard, and it's been. Listen, it's a good environment to. I know I've said it before. It's a good environment to be an investor, and so I'm doing my job.
And it's a nice crew to be locked in with or looped in with. So good to see you.
Thanks for having me.
Rick
Appreciate it.